Good morning and happy new year, everyone. How's everybody doing? Robinson, good morning. Bring you down. There we go. All right. Lively crowd so far. Everyone get their email and text okay? Got a lot of yeses. That's good. Perfect. We'll be getting started in probably 5 minutes, but if you have a question, now's a good time to ask. Otherwise, hope you all had a great new year. And we'll just kind of hang out till Roger gets here. Awesome. He's not tanning. Oh, yeah, big fiasco this morning with the Zoom password, but it's all resolved. Uh mm, Nobody, just the VIP room at 12. No, Simon would be impossible. Couldn't We don't have two Rogers, so hey Mike, happy new year. Steven, happy new year. Hey PJ. Something to place a put on. Well, you don't want to force it unless you need to hedge. If you need to hedge, you're super long. You just short, put a put on whatever you have the most exposure to. Yep. Well, we kind of need to see it break one way or the other. Oh, Sal, first time here. Awesome. Well, welcome. We'll start soon. Everyone is super nice here. So if you have a question, don't be afraid of the chat. No, Betty, we just haven't gone live yet. It's in the Telegram. There's been a couple trades. At least one. Let me look. I know he was watching a few, but we slow to pull the trigger. Hey, Derek. Oh, nice. Matt made money. Oh, cool, Ann. Good way to start the year. Awesome. There we go. This one. Yeah, Neil, send me an email and I can probably get you set up pretty soon.
Good morning and happy New Year's, everyone.
It's matt@rogerscott.com.
Hey, Derek. Ann, how are you? Brendan, how are you? You too, Brendan, Jeffrey, Petro, Ann, Art. Look at that. Robinson. Hope everybody's doing well. Hope everybody had a nice, healthy, happy New Year's Eve. Jamel, Happy New Year's. Go Washington Huskies. I hope everybody's good. Can you make sure all the emails and everything went out, Matt?
Already did. Everyone said they got it.
Good. Now, this morning, hey, Scotty, this morning I was trying to go live and they gave me a new Zoom room last week just to make life more complicated. And they changed the password on me this morning and they told me later on. So I was so see what happens is I lose track and I have so many things to talk about and it's important. I got the markets and then I get sidetracked and I ended up doing the video and but tomorrow I got the new password. So I should be able to log in tomorrow morning. And what we'll do is we'll start scheduling at a regular time. What you folks need to do is this, and I'm going to give you. Here's what I want you to do, Matt. I want you to post the link. I want you to go to YouTube and post the link to my YouTube channel. I think it's Roger Scott. I think it's YouTube dash Roger dash Scott. I think that's what my YouTube channel is. I know Matt. I know that Ken posted it last week. My pleasure, Billy. And financial sector. There it is. That's it. Yeah. Go there. Here's what you guys do. Go there, subscribe, and press the bell. If you press the bell and subscribe, every time I go live, it's going to be it's gonna give you a heads up on your computer that I'm going live in the morning because I don't have a set time yet. I may go live at 8, 8:20, 8:10, somewhere between 8 and 8:30. But I want you guys to do that. And also, else I'll do, and this is a good idea, Matt, because I'll have that link ahead of time. I'll be able to send it to Telegram and say, "Hey guys, I'm live right now," which will be really good. So it'll be fun, and I'll start doing that in the morning. Hope everybody had a really nice holiday, days off. I spend the days hanging out with my wife, my kids. My son couldn't make it to New Year's. He got really sick. He got a stomach bug, so he ended up staying in Gainesville. But my daughters were there. Murmur says, "If we keep trading like this, maybe." Oh man. All right. As far as the markets are concerned, let's talk about levels. Levels. Pull up. Let me share my screen first of all. You too, Dr. Serena Reap. You too. Is it number 6? Yeah, it is number 6. Okay. So let me go ahead and put my levels up here. So first of all, before we get to levels, I want to talk about calendar. Today we had the PMI, the construction spending that came out today. Today's Tuesday. Anytime you have a fragmented week, it's going to be low volatility. A lot of traders are still starting to come back again. Get into nobody's going to really be back. Not the hedge funds. They're not going to really be back till probably Thursday-ish, maybe Friday. It is, Brad. It's the same channel, but make sure you hit the bell. A lot of you guys subscribe to it, but you don't hit the bell. You got to hit the bell and or subscribe to it. You got to subscribe first, then hit the bell. So tomorrow we have Fed speakers. This is going to be pretty important. And as the days continue, as we get deeper into the week, we're going to get. Hey, did you see that, Matt?
I already got it.
All right. As we get closer into the week, we'll have more volume, more volatility, and usually we will have volatility. Now we still have the Christmas Santa Claus rally statistically for two more days. Okay, for 2 more days. I only want your notifications on all of my YouTube interests. Okay, yeah, thank you for that. So the big reports is going to be FOMC tomorrow. The minutes are going to say this, and I'm pretty sure they're going to say this because the Fed has been as clear as it could be. And the Fed said, we're not talking about lowering rates. We're just not. We're not talking about it. It hasn't started yet. We're going to talk about it, but we haven't started talking about it yet. So let's first get there. Let's first get there. Hold on, I just got a little signal on something. I want to check it out 1 second. Never mind. False alarm. I got a false alarm on UPS. Didn't look nearly as good as I thought it would. Uh, huh. Okay. Sorry about that, folks. Thomas, the video is not fuzzy. The reason the video is fuzzy for you is because you watch it really quickly. If you take a few minutes to watch it, it's in 1080p. You could switch it to 1080p. Let me show you, for example. You tell me if it's fuzzy. Let me give you a little example. Go here, you go to Roger Scott, go there, we go here. This is 3 hours ago. Does that look does that look does that look fuzzy to you, Thomas? 1080p. Now that's fuzzy. And that's about as clear as going to get. All right. So let's turn this off. I hear myself talk more than enough. Okay. Yeah, you're just not looking at it on the right setting, bud. 1080p. So we have the Jolts tomorrow. We have Barkin speaking. We have FOMC. The FOMC is going to be very clear. I am 1000% sure there's not going to be any inferences of lowering rates in there because that's the last thing they want to give the market. The market's already pricing it into 82% for the love of God. Thursday, we have ADP, which is going to reflect on Friday. This is a market moving report. Although it has been terribly off. It hasn't been a very good report. It hasn't been very accurate. Then we have employment data. This is a big report, and this is something the Fed looks at because we're going to have private payroll, and private payroll could potentially be inflationary or deflationary. It's been moving in the right direction. The question is going to be now, is it going to continue? Hey, Ken, how are you? Yes, Ken, I do. Not right now. I was thinking more third week of this month. Not yet. I don't think it's going to happen yet, but I think eventually it's going to happen because I think the market's going to say we're just not there yet. We're not there yet. Well, the market's. I don't know who's. I don't under. You can't argue with the market, and I'm not going to go with the market. And you notice I've been going long, only long. There's no short trades right now at all, and we got to go with the flow. But I don't agree. That means nothing, obviously, but I completely disagree. And I think that the reason the market is, I don't know about now because it's that whole New Year, sentiment, but generally speaking, this whole thing right here, and I'll bring it to your attention. I've been very vocal about it. The Fed's been very vocal about it. The Fed says, "Hey, I." The Fed actually went out of their way to say, "I think we might have miscommunicated ourselves. We're not talking about lowering rates." Hey, look right here. Here's that catalyst right here. Right here. This right here. This started it all right here. And then this gave the second confirmation. But right here, up to this level right here, if the Fed is not going to start lowering rates in March, which I don't think they will, and I've talked about it ad nauseum, I think we're going to come right back down to here. Nothing crazy. I mean, what it erases, let's see, a month and a half. We were here 11, 13. Yeah, a month and a half, 45 days. It's not much. It's not much at all. But I think I think it's for the best because I think if that happens, the market will have a lot better firepower to go higher. Also, I don't think this is going to get it up. Remember when I drew this years ago? I think it's going to break through and start breaking down. And also look at our best friend Kathy. Remember, context. Look, she's already down in here already. Just another false breakout taking us to the base again. And yes, I drew these live on air here, and I told you that the market was bottoming out on 5/16/22. Just FYI, I remember it like it was yesterday. You could look at a lot of you guys were there. It's a very interesting time. I remember a lot of folks telling me I was nuts. Okay, here we are. Okay, so looking back at the SPY, let me put on the regular charts. Let me put on my charts here. No, you can't short any of that, Thomas. BB remembers. There you are. Ray, what are you saying right now? I was here on YouTube and you guys don't monitor the subscribers chat. We will, Ray. We will. I've been monitoring it on YouTube, not on YouTube here on the morning one. You're right. I haven't been monitoring this one. Hey, why don't you start monitoring it? Just add it to your screen. Yeah, we'll do it right now. Thank you, Ray, for that. And Ray, as you requested, I went ahead and we changed the settings so you could now move my ugly mug all over the screen at your convenience. Are you happy with that, Ray? You're welcome, Ray. Okay, so let me just change the template. All right. To confuse you even more with all these squiggly lines. So the next level of support for the S&P, and this was not unexpected. This was very expected. I think the next level of support is right here, which is going to be 468 on the S&P 500. And I believe we're probably going to come down right here, right to the 560 level, which would be really nice. It would be really, really nice. No, Steve, you shouldn't. I keep you guys updated in the morning and in the afternoon. You'll know. You'll know. I have no shorts even to issue right now. There's nothing to hedge right now. You can get a little VIX, but I wouldn't go anything crazy right now. By the way, we did break below the 8-day EMA. The fact that we broke below the 8-day EMA isn't super significant, but it's something we should be noticing right now and paying attention to. My suggestion, if you want to hedge, start here. Let me show you. And Steve, you didn't watch my morning video today. I know you didn't watch my morning video today because in my morning video today, I gave you guys levels on the volatility index on the VIX, and I said if it breaks above that level, you should probably go long or hedge. Exactly, Ken. Exactly. 15. That's right. I said it, and Ken has it. People have very selective memory, but anyhow, I did say it this morning. I did say it right here about 15. You can even go a little higher, but I want to see it really start showing because you'll notice if it moves, it'll move. It'll move more than 1 or 2 days. Usually, if it's big enough to move, there's something going on that'll make it move. Well, Michael, that's what I just said. That's a great question. I don't have a set time yet. I'm going to work into it over the next couple of days. But it's between 8 and 9. And I'm going to give you guys a heads up. Hey, I'm going live on my YouTube channel, and it'll have a little live tab. And then I'm going to set a scheduled time. I'm just trying to work into it. Clyde keeps me busy in the morning. Baby Louie and Clyde and Bonnie, they keep me busy in the morning. So I got to get the time. Art, what can I tell you? That's why I moved away. Do me a favor, Tim. Don't post any videos of other people on YouTube unless that's my video, please. I don't know whose video it is, but
your video.
That's perfect. You could do all that all you want. I didn't know. That's why I'm gonna say if it's not mine. My videos, you could post my videos for the full hour and no problems there. Okay. So yeah, but right here is the level right here. So there's different ways of doing this, guys, and I wanted to talk to you about it today. So somebody's bringing it up is a great idea. One way is volatility. If it moves above if it moves above the moving averages. The other way is the bond market. Right here, notice we're already crossing this line. If we cross below the 200, let me make it bigger. If we break below the 200-day moving average, maybe come down to the 96-ish level. And look at that happen, right? Who was it? Was it you, Petro? Was it you, Petro, that said something about a 100? Someone said it was someone longtime viewer said something bonds are right at 100. The TLT's right at 100. But anyway, so you've got the 200-day moving average. If the 200-day moving average doesn't hold, there's a good chance we're going to start coming down. So another good hedge for the SPY would be the bond market. It's not a direct hedge, but it's an indirect hedge. VIX is nothing like the VWAP, Betty. VWAP is an indicator. VIX is an indicator, but it's also a tradable tool. So that's the two ways of doing it. But honestly, what's going to happen is this. If you guys want me to give you the best hedge possible, is this. Lower your exposure in the longs And we're going to start getting when we get our first shakeout to the downside, we're going to start we're going to start breaking down and we're going to start seeing 90-day breakdowns really start hitting. I'm going to start shorting those stocks or buying puts. That's where you want to be. That's going to be your best hedge. So don't overhedge yourself. Maybe selling a little bonds if we break the 200-day moving average. Maybe buy. And typically, if you want to hedge yourself, you should hedge 1/10 of your portfolio. That's the typical rule of thumb for a hedge. 1/10. 1/10. You don't have to go crazy. 1/10. Okay. As far as the pit, the trading pit, man, I love that trading pit. We're long right now, BSX. We got a long right around somewhere around the current price on last week. We have an option on it, waiting for it to break out. As you can see, it's doing absolutely squat. I mean, just not doing anything. We're getting a little tailwind from the healthcare sector, but we're just sitting there. And we took a day trade on, what was it today? On Citibank and made money. Any of you guys make money on Citibank today?
Yeah, quite a few people.
Oh, I didn't see. I haven't been paying.
Was before you came in.
See, I'm trying not to pay attention to the chat. So that's where we're at there. Now, again, here's my big concern. My big concern is the bond market. The bond market's already starting to cool off a little bit. This is not good for the S&P 500. What else is not good for the S&P 500 is our momentum levels. I've also shown you this, and I've only started talking about it when I'm not going to talk about them unless they really, really start getting there. But they're getting there. I mean, look at these 92, 92, 89, 90, 95. They're getting there. They're definitely getting there, at least on the 50-day. So we got to look for a swing back or a pullback or a back test, whichever you want to call it. Oh, good, Rado. Good. No complaints. Not getting any complaints. Look at that. We got over 363 people here and nobody's complaining. I love that. Love that. It's going to be so fun to do the VIP room in the pre-show in the morning because you guys can ask me questions. I can hang out a little longer because I don't have to process and upload the video. It's going to be a lot of fun. But you could see all of this is just way overbought. Now, remember, there's two ways it can correct. It can just go sideways and then it can start coming down. But I think this rally is not going to be a choppy rally. I think it's going to cool off. I really do. What are you saying, Ray? Ray's always selling covered calls on everything I want to hold forever, and will buy protected puts on first break. Have already reduced positions, so have lots of cash. Oh, that's good. Good. Used up a day trade. Well, there you go, Eric. All right. Okay. All right. So we're all on the same page. Now let's go through some stocks. And by the way, so the trading pit sale we had last week, to say it was popular would be like a gross understatement. People went crazy over it. They want me to do 2 more sessions, so I'm going to do it after this, and we'll post. Matt will post the link for you. But it's been going nuts. Why you can't see Ray's comments? I don't know. Let's see. Because Ray decided to just tell me. He didn't want to share with you. But I read it anyway. Here, you want to see Ray's comments? Here's Ray's comments. Here. There you go. There you go. Nothing private, nothing crazy in there, nothing personal. Just nice stuff. Good stuff. All good stuff. Okay. For all you nosy birds. Okay, let's talk about stocks that we like. Let me pull up my PC 2000.
There's a question for you.
Oh, question, yes.
And I can answer it, but you should.
Dave, no. Oh, wow, look at Vivek. Ooh, did you get copy that one, Matt? Yep. Vivek's above. Dave, maybe in no, if I was doing small caps, it would be a huge problem. I'm not doing any small caps. I'm doing S&P 500 stocks. I can assure you the amount of liquidity we put into Citibank today was probably offset within all of us together, was probably offset within 1/10 of a second.
Unless we've got a couple undercover billionaires in
Yeah,
here,
unless we have
it's
a
going to be
couple.
a
Yeah, now,
long.
if there's a couple of now, I do attract a few. I got to say, in my life, I've worked with two billionaires. One wasn't enough. Two, I work with two. Um, but that's a good question. It's a valid question. Unless there's some billionaires here that really start moving the market, and I haven't seen any shred of evidence of that being the case. No, you're not going to do it. And a billionaire doesn't need to do that. A billionaire doesn't need to day trade. It defies the whole purpose. Yeah. Yeah. It's a good question. It's a good question. Small caps? Oh yeah, like that. Easy. 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 Not here. Not what we're doing. Not even we're not even like no. Just the answer is no. Maybe for one we're manipulating the market for 1/50th of a second. Okay. So let's talk about stocks. You could still see my screen, right, Matt?
Yep.
So as far as the drill down, I think from now on I'll always start with the drill down because you guys like it and it's so easy for me to do. So what I do, and I do this every morning, and what I try to the question art is, can we manipulate the market with our activity level? And I said no, no. Unless you're trading like unless your account size is about 150 million minimum, no. There you go, Howard. I love the answer. Exactly, Ken. Yeah, I always tell you guys when to exit. If I got you into a trade, I'll get you out. By the way, T-Buzz was at my house on New Year's. We were hanging out, we were having fun, taking pictures. We had a blast. Ken, if you ever come out here on New Year's, come out to my house for New Year's. It'll be so much fun. We'll all hang out together. It'll be a lot of fun. Did I incorporate sectors into Thinkorswim? Yeah, Omar, a while back. But remember, it's only S&P 500. Okay, so what sectors are hot? Well, healthcare, but within the healthcare, drug manufacturing, healthcare plans, biotech, medical care, pretty much everything except medical devices. Communication services, telecommunication is hot. Energy, oil and gas, E&P. So not the drillers. Drillers are also pretty hot, but EP. So in those sectors, you got here are the stocks in those sectors. Not a huge sector for us to trade. CNX is there. Just FYI, that's a stock we trade. Matador's there. Very choppy. Wouldn't recommend it. So utilities. Utilities are up today. Bonds are higher and utilities are higher. Not a good combo, but you could see across the board regulated electric, regulated gas. Utilities actually are looking pretty good. Healthcare and utilities are starting to get strong. This is the sector that I'm going to really love this year. And I told you this morning in my morning video, which I hope you guys watched, that consumer defensive, consumer staples, consumer defensive, same thing. Consumer defensive and consumer cyclical is consumer discretionary. If you guys don't know, so consumer defensive stocks, um, confections, packaged foods, tobacco, food distributors, farm. By the way, for you guys who are commodity traders, have you guys seen the price of cocoa lately? Holy moly. Chocolate's going to be pretty expensive next couple of quarters. That's all I'm going to say. Okay? Leave it at that. Real estate. Let's see what's hot in real estate. REITs, office REITs. Interest rates going back up. REITs are hot. Go figure. Really hot, like super hot. One of my favorite sectors. They trend very well. And then you have some sectors that are not really up, they're down. Within those sectors, financial and stock exchanges are not doing well today. They were really good first part of last month. But you could see right now, financial data, stock exchanges, specialty finance, not good at all. Basic materials, lumber and wood are not doing well today. it's it's amazing because it would take us so long to do this manually, and it just does it for you. The industry, the sector, and the stocks, just all right there. Whoever created this really had like relative strength in mind from the ground up. Shipping is up today. Infrastructure operations, airport services, industrial bank business services down today. So you have a very wide range. And this is kind of, if you ever remember my webinars on ETFs, I always talk about how within the ETF, one industry, one sector can offset another sector. Like like it's only down 0.62, but you've got one that's down 190 and one that's up 1.71. Kind of interesting. Anyway, for me, I'm a nerd, stock nerd. So for me, it's interesting. Resorts and casinos are doing really well. By the way, my wife and I, we used to go to Vegas. I don't gamble. I never gambled, but we used to go to Vegas first week of the year because it was the easy, there was hardly anybody there. It's a great time to do. Uh, Tracy, the drill down screen comes stock and standard with TC 2000. I didn't create this. It comes completely standard. If you have TC 2000, it comes with it. It's called drill down. I didn't even change the name or anything. Yeah, just FYI, it's very cool. Yeah, so it's stock. It doesn't nothing to do. It didn't have to do a damn thing. It's consumer cyclicals, resorts, casinos to the downside, leisure, gamble. So look at this. Resorts and casinos are up, but gambling is down. How do you even? I mean, I guess very specific gambling like DraftKings, but actual casinos like resorts and casinos Win Las Vegas, they're doing well. Okay, okay. Interesting, very interesting. A little arbitrage there. And finally, technology. Solar is heating up. It's been heating up for a while. Jeffrey, as I told you, it's not just J&J. It's this morning on my stock on my screener, on our screener, not my screener, our screener, the top stocks were Merck, J&J. Basically, I send you guys a diagram uh, this morning on Telegram. Let's see, what time was it? Right here at 11:01 a.m. Right here. Look, BMY, Johnson, Moderna, AbbVie, Merck, Guild. Those healthcare. It's on fire today, and I actually don't know why. I have no idea why. Okay, let's go. Continue. Let's continue. Oh yeah, Ray. There's a sector heat map here too. I don't remember how to get to it, but yeah, there is. There is. Remind me. I'll check, but there is one. There is one. It looks just like Think or Swim, but there is one, a live one. It's pretty cool. Do you use it, Ray? No, it was just a regular Telegram, free channel. Just a free channel, Wendy. I send you the red meat on the other one. I gave you trades on the other one. Okay. And you should be subscribed to both. Seriously, you should. Yeah, it's a cool program, right? I don't have like an affiliate link. I don't make any money from it, but I love this program. I'm just getting started with it. So let's now talk about trades we like. And I'll switch the screen to this one. There we go. There we go. Perfect, perfect, perfect. Get my options on here. It's easy. It's very easy and it's very lightweight. Oh, we got it, William. I already have it. We already have it right here. Ahead of you there. Okay. Option chain. Here, let's start. So the first one is triple M. Nice, 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 nice. Triple M. I like how it's looking. I like this move. It broke out of this level. The next level up is 113. So it has a little more upside to go. Volume is pretty good. And it's not a tech stock. I'm very nervous about tech stocks. It is a dog of the Dow, Ray, and dog of the Dows typically do well beginning of the year, which is actually one of the reasons why I'm focused on it. But you beat me to it. I like the 24 days till expiration option. The spreads are pretty tight on it, and implied is not that high. You would go to 24 days. Actually, no, don't do that. Go 17 days out and go ahead to the 107 strike price. My stop in this case would be about 105-ish, 105.82. Next one, Tyson's Food, oh, TSN. That's another one I always get confused. Tyson Food and Texas Instrument, right?
TSN, TXN.
Yeah, it's just, little things like that. So it broke out of support right here. It doesn't really have much to go till 57.28, which is still, it has some room. Volume has been good in light of everything. The stock is looking really good right now. For this stock, I would go pretty deep in the money. You got about $1.30 here. Yeah, just do 53. It's okay. It's not that bad. Do 53. 53 right here. Oh, wrong strike. Not 10 days out, 17 days out. So 53 right here. 53, 17 days to go. Jan 19 expiration. Just want to make sure you guys are all on this. We're all on the same page. My stop loss here would be below this bar. Be right here. Now, don't go buying all of these. Don't just say Roger's saying to buy all these 20 stocks. I'm going to go. Please don't do that. There's a reason I'm doing this. I want you guys to start not to start relying on my analysis to figure out what you're going to do. McDonald's, no, too much resistance here. Too much resistance here. Next one, EIX. Yes, 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 yes. This one is breaking up to the upside. I like this one. I think it's going to go up to about 74, 75. I like this trend. The stop would be at about $70 even right here. We would go 17 days out. The 67.50 right here is a sweet spot right there. Believe it or not, but you're paying 43 cents for this option. 43 cents. Look, 463, 420, you're paying 43 cents for this option. No, excuse me, 30 cents. They just pulled a fast one on me. No, you're not. You're paying 40 cents. 40 cents for this option. 40 cents. They changed it on me. And by the way, if you didn't get a chance to get out of C before, you could get it out right now. It's above the day's high. Hey, Ray, are you in the trading pit? I didn't even, I don't, I should have asked you. I didn't even know if you're in the trading pit. I think I gave the strike for this one. The right here. 67.50 strike. 67.50, 17 days till expiration. You're missing out, Ray. You're missing out. HON. Also right at resistance. Nope, we don't want it. We want it to wait. Waste management. Yes. Yes, 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 yes. It's at a pretty low point right now, too. The stop here would be at about right here. Below this level, right there-ish, about 175. We would go 17 days out. And if nothing happens in the next 3 or 4 days, you don't want to be in them, okay? There you go, Murmus. The strike price we want to do here would be right here, right here, the 170s, the 170. Your delta is going to be 0.970. Your spread is only, you're going to be able to get this for a better, you're not going to spread pay that much. It's not going to be this spready. And your intrinsic value is less than $2. You're implied, you're going to be paying less than $2 here, basically. Yeah, that's going to be the next one. Next one, next one. GD, let's take a look. Oh, I like General Dynamic, but it's a little too far away from the 8-day EMA. I'd want to wait for it to pull back. I would put an alert here at about 257 and wait. Too far away. Next one. I'm not in a hurry today to buy up stocks. I'd rather get quality instead of nonsense. Now, I like this a lot. Why? It consolidated. It tried to trap sellers. It now is trading above, not too far away. We had good volume. This is a good trend. And if you look here, we haven't been at this level. So that's a pretty powerful move right here. My stop in this case would be right here, 79. The only issue is liquidity. You can go about 17 days out, and you can get the 75s. Yes, or you could do the 80s that expiring in 17 days, but I wouldn't go. And by the way, we're making higher highs on the S&P, just FYI. It's causing our BSX to move a little bit, not and nothing we're talking about. Next one, FIVE. Now the stock is pulling back right now, but I like where it is. I like this rally. I'd like to buy it right around the current level, and I think it's going to stay here and possibly rally again, but I like this. It's actually pulling back a little bit, which is kind of nice. The stop loss would be at about 206.60, and the option would be 17 days out, and we would go for the we go for the 210, which is still expensive, even if you go in the money. Yeah. And the options are not great. I would actually just do the underlying here. Okay. I gave you this stock earlier today. Nice breakout right here. I'll give it to you guys here right now. And I actually like it right now. I like this stock. I gave it to you for free today in the main Telegram channel. The stop here would be right at the 441 level. You want to give this trade a little room. It's a defensive stock. Defensive stocks, usually when they rally pretty well. Look how it took out this high level here. In terms of options, I would be looking at the. Notice when I press this, it changes the line here. It's pretty cool. Look at this, Matt. It tells me how deep in the money it is based on where I press this. Isn't that cool?
It is.
I tell you, every time I use this program, I like it more and more. Yeah, so the stop loss is there. I'd go 17 days out. We would go to spreads are You'll have to work the order a little, but probably the 455. You're going to end up paying no matter what. It's an expensive stock. The reason I didn't want to that's one of the reasons why I didn't want to give it to you in the as a set trade. Now, a couple more. ABTT, Abbott, another stock that has quite a bit to go. Healthcare stocks are not very interest rate sensitive. Notice there's not a lot of tech on my list today. We have a stop right at the 108.30 level. Options on Abbott have always been very, very pristine. So I would say right at the 106 right here. I don't care that there's no liquidity here. Look at the market. The market's just as tight here with no liquidity as it is right here. Doesn't matter to me. I care about the spreads, not the liquidity. Look at the delta. It's about as good as you're going to get. Um, you're barely paying anything for these options. Literally paying anything for these options. Go with the 106. You're literally not paying. You're paying like 20 cents for these options intrinsically. No, this is not trading pit trades, Brett. I was just making a comment that I didn't give LMT as an official trade. I gave well, we're already out of it. I could talk about it all I want. I gave you guys City today and they made folks made out like bandits. In addition to all the other trades we've been closing out. We're only open one trade and that's BSX and that's a swing trade and it's been kind of sitting around break even down 20 cents, up 20 cents all day today, not really doing anything. Oh, I think I gave you 10 days out. Let me redo this one. Let's go 17 days out. Yeah, let's do this one right here, 106. You're literally paying 45, 47, like 40, 47 cents for it or something, 50 cents for it. Not a lot right here. And to the short side, I'm currently watching something. Do you see why? Do you see Starbucks? It's a good hedge because if the market craps out, the stock is probably going to give in. It's got all the way till here. But can you guys see why? Breaking down. The only thing is we don't have volume, so you may want to wait for a little more. But I think this is going to go down. I'm not going to issue it, but I'm just going to tell you about it. And let's talk about puts today. Thing is so fast. Right here, the 97. Your delta is going to be 0.76. Your spread is 8 cents, which is not worth talking about, or maybe 10 cents. And you're talking about 39 cents out of the money. Look, 261, 303, you're talking 43 cents. That's what I'm saying, Dom. Take care, Robinson. Stop loss, easy. Right here. 97.10, 97.15. That's a good hedge. It's a good hedge. Okay. I'm going to be back. Do you know, Matt, if it's the same room today we're having the class?
It gave me a link, so I don't think so.
Well, just posted there
I did.
anyway. But folks, I'm going to be talking. The link is right there. Oh, I guess it's a different link. Roger Scott /Tuesday. I'm going to give you 3 of my shopping predictions. You like that, Matt? Shopping,
There you
not
go.
shocking, but shopping predictions. So we can go shopping for some stocks. I'll give you some updates. If you haven't seen it yet, I would suggest you guys check it out. It's pretty cool. The room has been a big hit. We've had since we went live last week. I think we closed like 4 trades or 5 trades. It's been holiday. They've all made money except for CBSX, which I'm just holding right now. And I will see you guys later. Don't go anywhere. Matt's going to give you seasonality, and I'm just going to get ready for the room that starts in 15 minutes. I'll see you guys in 15 minutes. Don't go anywhere. Go ahead, Matt. Take over.
Okay. Let's get this shared. All right. Should be able to see my screen. Here is once again the week ahead graphically. Yeah, right. It's right here. You read my mind. So a little bit choppy. Utilities seem to be really strong. Healthcare's also decent. The graph is a little misleading. You have to check the axis on that. So this is stronger than XLU. though it looks different. Financials still look decent, and energies seem to heat up. You should be able to. Mine's free floating, so yours should be too. All right, let's look at the broad seasonality. Start at the 10-day hold. Uh, we're maybe slightly favoring the long side, but I'd say we're pretty just in the middle. Not a lot going on in the next 10 days. But in the short term, healthcare is still super strong. It's been for a while. Even the chart will kind of tell you the same thing. So that seasonality is working. Tech looks good. Basic materials look good. Everything else, doesn't look terrible, but doesn't look super great. On the short side, we have not really materialized anything except for consumer staples. That's been hanging around, pretty consistent. And it makes sense if consumer discretionary and tech are doing well, consumer staples typically will be inverse. Let's look at the top long setups when it wants to load. Thank you, Nil. A healthcare stock, Agilent, pretty strong. Not a ton of trades, but does look pretty good. You can see a lot of tech financials, real estate kind of dominating the top of the long side, but it's pretty broad. Healthcare kind of squeaks in there, but it's starting to fall down the list. Individual setups, I didn't mark any today. Kind of waiting for the market to decide if it wants to get long or get short. So we're kind of in a holding pattern. The number, if you're curious, is 185. So nothing to write home about. On the short side, anything that's a consumer staple that's high in this list, I would want to take a look at. Campbell soup, I would stay away from. That's really hot today. Another one. It's, maybe a bit oversold, but it looks strong. I've got the chart to my left. I'll show you what. I'm just going down the list and looking at the data. See if we can find something. Yeah, most of these consumer staples are pretty strong today. I'll have to hold out and see what happens. The number for the short side's really weak. It's 100. That's nothing. Then we'll come on over to 10-day hold. Healthcare technology still really dominating the top. Not anything with a ton of trades. Let's look at the short side. GPC was on the it's on the short scan and it's on this 10-day hold, but it looks like it's just consolidative. It's probably not a great trade. And that is about all I got today. You're welcome, Glenn. Here's the link for the 1 o'clock. And I will see you tomorrow. Looks like we have a question from Marina. That is a great question. And how do you get the paid Telegram? You can send me an email here. And I will get you to the right place. I don't know off the top of the head. You can always call the company, but I don't have a direct link to send to you. Thank you, Angel. Yeah, bro, good question. I just again talked to the tech team this morning. Here's the problem. If you're curious about the data miner, we have it, we have the software, we're running tests on the site, but because it's going to be hosted inside of our website, there's a possibility that basically would be a bomb that could just totally crash the website. So they need to stress test it to make sure that it's not going to do more harm than good. Once that works, then it'll be live. Thank you. Happy New Year, everyone. Here is the link one more time to the 1 o'clock, and I'm going to get out of here. Send me an email if you have a question, matt@rogerscott.com. I'll see you all tomorrow.